Hi, this question is a second question for the paper May-June 2021. Paper 21. John and Banu are partner. That means this is a partnership topic. The partner provide the following list of the balance. So this is all the account. So I hope you're familiar with the account section. Okay. Additional information. Year-end adjustment. Year-end adjustment. Depreciation calculation. And then this is a partnership agreement. So let's settle the additional information first. So number one information, inventory at 31st March 2021 was valued. This is a closing inventory. So closing inventory is under the cost of sales. Okay. Now, at the same time, this under the cost of sales, you have to deduct. Another one will be under the current set, which is you have to add together. So there's two items you need to take notes. Second is that rate of 650 were unpaid at 31st March 2021. So this rate is end of the year. So this one is a current liability unpaid. So current liability will appear 650. For the income statement amount, for the rate under the income statement of account expenses section, we have to plus. Okay, so we have to take the what have been paid on the school on here, rate and insurance 21,11250 plus the amount unpaid 650. So we get the amount. Let's calculate first. So 11. So this is the answer we get. Next is that number 3. Commission receivable of 300 was due on at 31st. This is income accrued. Income accrued also we have to add because end of the year. So commission receivable, end of the year, end of year. This one is a current asset, which is a 300 because income accrued. Income accrued is this is an income accrued. Whereas this one end of the year accrued unpaid. This is the expenses accrued. So expenses accrued is a liability. Okay. Now come to the commission receivable under the income statement. We put under the other income section. This amount have to plus. So we take amount the commission received, which is 4,008. 4,008 plus the 300. So we get 5,100. So this is total recognition. So number 4, depreciation using the straight line method. So depreciation using the straight line method. So we take the cost. Okay, the fitting at cost 18,000. 18,000 times the 15%. So we get 18,000 times 15%. So 2007. So this is information. Whereas number 5 is a partnership agreement, interest on partnership. So the number 5 information, okay, partnership agreement, it will help us to prepare our appropriation account later. Okay. But here they got loan, accept the loan, accept the interest on partner loan. This interest on partner loan, you have to recognize under the income statement, under the expenses section. So the rest is go to the appropriation account. Okay, now let's continue. See the question. Okay, the question is asking prepare the income statement. So what are the information that we have? So let me move this one up first. Okay. Revenue section. Okay, we put down the section first so that at least you got to use to it. Okay, less. Okay, I put less. Cost of sales. This is all the section that you need to memorize. Okay, then after that, gross profit. After that, add other income, all the section, less expenses. Take notes that there's a slightly change on the syllabus, which is that we need to have the profit from operation. After that, have to less the loan interest. Then after that, only get your profit for the year. So this is a new syllabus about the syllabus change. This is the area that you need to take notes. Okay, the rest more or less are the same. Okay, the revenue amount is 15800. Okay, is there any return? So there's no return given, so no return. So this one, move up. Okay. So here we have inventory at 1st April 2020. Purchases, and then I need purchases return. Okay, no purchases return, then closing inventory. So closing inventory at the 1st March 2021. So this is the information that we get. Now we put down the amount, put into the first column. Okay, purchases is 69200. Inventory is 92. So take this plus and minus. So if you, in case you scared that you forget, so in front you put negative minus so that you know that you had to minus it. So now let's continue. Okay. Take this minus. So our gross profit will be 88,600. The next item will be our commission. Just now we already calculate the adjustment, commission receivable. So in the exam, always remember, show your working beside your detail if there is any adjustment. So this adjustment we might make in here. Okay, so this one is 5,001. So 5,001. Only one item straight away put into the second column. Okay, so this is set to plus. Okay. Now next continue. The expenses from the list of here, we start from the beginning to check which one is the list of expenses. Rate and insurance, wages, general expenses, discount, allowed, and then premises, there's no, okay, let's see, depreciation for 15. Okay. So this is a item that we have. So now, next is what else the item? Let's see. Okay, here got interest on partner loan. Okay, here later on we have to put it in interest on partner loan. So this one later, huh? This all no more. So we can put in this all the item here. So this is the partner loan interest. Okay. So now we calculate. So this one rate and insurance. Just now there is adjustment. Rate and insurance 11250 plus 650. So we get 1190. So 1190, which we calculated. Wages no change. Wages is 10475. General expenses also no change, 675. Okay, one thing is that take notes. In case in the exam there's too many line and together, what I would suggest is that in between on the item, you just underline so that you clearly see that all the item and the amount. Don't wrongly take the amount. Sometimes the mistake done is not that you don't know. It's because you wrongly see the number that's supposed to take. So this is one of the way that can be done. Okay. Second thing is that let's say you already see all the working, all the additional information. You know that this one 650, you need to plus. So I would suggest is that what you can do is you put into the beside the rate and insurance, you plus 650 so that you know that this one you later on when you calculate your rate and insurance, you have to plus this amount. So this is one of the way so that you won't miss out the item. Okay, now continue. Discount allowed. Discount allowed is 2000. And then the depreciation forfeiting, because this one is a straight line, so we calculated in here. So take this one times the 15%. Try to show all your working, how you get the number beside your detail. So this one is 2007. Okay, subtotal first. Get the profit from operation and the interest on loan, which is the partner interest loan. So the partner interest loan, let's see, where's the loan amount? Okay, here, loan from John, 10,000. So 10,000, how much the interest? 5%. So we take, show the working, same thing, 10,000. You can just put out the number also can, 10,000 times 5%. Okay, so this amount, put into here, 10,000 times 5%. So you get 500. So minus, you want to put bracket can, just to make sure you know this is have to minus. If don't put, also fine. Okay, so this is a profit for the year. Which is we have done. Okay. The second is next item is the appropriation account. So we move up so that easier for us. Okay, it's using this information a lot. So let's see. Appropriation account start from the profit for the year. Profit for the year. And our profit for the year, which is we calculated in here, which is 56. Okay. 56450. Okay. Add, just add in the addition, in standard item, add interest on drawing. This is one of it. And put down the partner name, John. And second is Banu. Okay. Next item, less interest on the. So same thing, put in the item. And then also less the salary, partner salary. Okay, put partner salary. Here is just now we only have, okay, who gets salary? John will get salary. So only John will get salary. We can straight away put John. Okay. Then next is that what else? That's all. Those is the standard item normally appear in the question. Okay, after that is a share of profit. So share of profit, John and Banu. So this is a standard item appear in the question most of the time. So what is the interest for the drawing? 6%. So we have to calculate 6%. Show all your working. So drawing 19,000 times 6%. And then for John, Banu is 21,000 times 6%. Okay, so calculate 19,000 times 6%. Okay, 1140. And then for Banu is 2100 times 6%. So these two amount. So add the subtotal. Okay, at first. Okay, for the interest on capital, what is the interest on? Interest on capital is 3%. So 3%. Capital 75,000 times 3%. And then Banu is 50,000 times 3%. Okay, so take these two times 3%, and then 50,000 times 3%. So we get the total, put into here first. Okay, for the John only have salary, so 8,500. So 8,500. So calculate the amount. This one have to minus. So this is a share of the profit. So what is the formula for it? They say that residual profit loss to be shared 40 to John, 60 to Banu. So in this case, John will get 46600 times 40%, whereas Banu will get 60% times 60%. So now calculate the amount. 46600 times 40% 46600 times 60%. So this is the amount that we get. Okay, so this subtotal, put one more time into here. So this is how we close, how we put in the appropriation account. First column, second column. Okay, now let's continue. Let's see what are the next section. Okay, for the C, state the purpose of charging interest on the partner drawing, paying interest on the loan from the John. So I'm going to share the slide so that you can have more information about the question. what is the purpose of the partnership agreement? Okay, this is an example that I'm sharing for you. Charging interest on partner drawing. Why we charge the interest on the drawing? Okay, give me a minute. This one is in the second slide. Okay, here charging interest on the partner drawing, paying interest on the loan. So this is the item of the content that what is the purpose for. For example, amount of capital invested, the partner do not need to invest equal amount. So that is the reason why we need to put into the partnership agreement. And profit, to how profit to be shared, so that to make sure that they all agree with the ratio or the percentage, so that in future to avoid the disagreement. Interest on partner capital. This is to reward the partner who contribute more the capital, so that also compensate the loss of the interest they can use to earn from other place. The partner salary, because partner work and responsible to the business, so they should compensate with the time spent on their work. So that's why we pay the salary. Upper limit to be set for the drawing. This is to set the limit to make sure the partner won't overtake on it. Interest on partner drawing. This is to discourage the partner from taking the drawing from the business. So this will affect the cash flow. Interest on partner loan. Why is if extra finance is required, a partner may make a loan to the business to compensate for the loss of the interest they could earn in other place. So this one, these two answer in partner drawing and also the interest on the loan. So these two, you can use it for your exam, which is for your, this is the idea you can put. Okay, let's we complete this one, D section. Okay, they ask for the advantage to John being forming the partnership with Banu. Continuity of existing of the business. When one partner pass away, okay, the partnership have to dissolve. That means John had to, let's say Banu passed away, John had to go and dissolve the partnership, and but the business still can continue. Only the partnership will not be exist. So there is a problem for the partnership. Business still continue, but partnership will not exist anymore. So this is not the advantage. Banu may have skill and knowledge which John does not have. Yes, correct. It will help John to build a business. John is only liable for the business debt up to the amount he agreed. For the business debt, all John have to bear because unlimited liability. So this is not advantage to the John. Additional finance is available to the business. So this one is an additional fund to John. Risk and responsibility are shared together. This is also advantage. John is bound by the action of Banu carry out on behalf of the business. So this one basically is similar. Okay, so this is not the advantage. John can discuss matter before making. This is a good thing. Somebody can discuss, can make better decision. So this is for the question number 2 that I'm sharing.